Buddy, Uneducated Economist here. Thank you so much for joining in on today's live stream. Be sure and hit that like button when you join in on the live stream. By hitting that thumbs up button, the YouTube algorithm will pick up the video, spread it around for more people to join in. Today we're going to be talking about the rise or the surge in delistings from real estate that has taken place right now. Very much in line with what it is that I believe has taken place out there, and that the homeowners that are now sitting in their homes with a low interest rate don't want to give that up. And that's pretty obvious when you think about how many people out there are sitting in, like, say, a 3% or less mortgage, or even something that's under 4%. That's a pretty dramatic difference, going from 4% to 6.5%, close to 7% where they are today. And so when you think about how it is that people are going to flip from one home to another, if they can't sell that home outright so that they can buy another home without taking out a mortgage, then most likely they're just going to end up sitting tight. And that's what I believe a lot of these homeowners, or at least the potential sellers of homes, are doing right now, is they're just sitting, waiting for interest rates to get into a much more, like, sustainable, I don't even know how to put it, like, a position in which that is more achievable for most people out there. And that's not the case. So when you think about all these houses that were out there for sale, saying, okay, well, maybe there is a potential buyer, buy it outright, and then they would be able to flip that into another house. So like, you sell your house and then be able to just go outright and buy another house somewhere. If that's not taking place and that house is sitting there on the market, well, at some point that homeowner is going to have to say, well, I'm either going to stay here or what? Rent it out. And see, now this is really where I think is what I really think has taken place, is that a lot of these people who would prefer to sell that home are not finding the buyers out there, right? The buyer traffic has pretty much been decimated. So if they can't find somebody to buy the home, they'll just rent it to you instead. And that's really where I think has taken place right now. You can see that the new home construction is starting to rise as far as the available of newly constructed homes. But that's not going to bring an ease in inventory, at least as far as the prices coming down, because those homes have a cost input that goes into it that can't really be adjusted. Like, the builder can take somewhat of a loss, but for the most part, they're not going to be able to cut it any further than where they are at. The only thing that they could offer up is the ability to try and find some sort of financing offer that will then give the buyer the opportunity to buy that home. So basically buying down the interest rate. But even on top of that, that's not going to move a whole lot of homes out there. And so you're going to find that the builders are going to be very frustrated, and they are going to back off on constructing new homes. That's not going to bring a lot of inventory to the market. So now this is what we are seeing here. We are seeing permit issuance and new housing starts slowing down dramatically. And now I'm seeing that reflected inside of the lumber market, where we have lumber sales that have pretty much fallen off of a cliff. And you can see that from that's obvious when you have the building permit issuance and new home starts that are falling. You're not going to have a lot of demand for lumber that's happening at that same time. So this is the situation that we are now in, is that the buyer traffic has been dropped dramatically, right, over the last few years. That doesn't incentivize the builder to go out there and produce new homes. The people who are sitting in their homes who want to sell them are not finding the buyers there. So what they end up doing is most likely either staying there, pulling their house off the market, or they'll pull a house off the market and rent it out instead. And again, this is probably more the case that we are now finding today. Many times you will find individuals who believe that there is going to be some sort of housing crisis, crash in prices, right? Very similar to what we had experienced during the Great Financial Crisis. Now, there's a huge difference that has taken place between now and what was taking place during the Great Financial Crisis, because during the Great Financial Crisis, mortgages were being issued to people who were never going to pay those things. That's not the case today. And so even if we had a downturn in labor or a rise in unemployment, something of that nature, where people were losing their jobs, and all of a sudden people are no longer able to make the payment on that house, I don't think we're going to see a drop in payments, or at least a rise in foreclosures, what we had experienced like during the great financial crisis, because so many people are looking for a place to live, they could literally just rent the house out if they can't sell it. And so the idea that there was a time back during the great financial crisis that everybody was in the same position, all these people who could never have paid their mortgage will all of a sudden found themselves in a position in which that they could not make that house payment. Those houses started going into foreclosure. There was this huge rise in inventory. That's not going to take place like it did. Right? I mean, there could be a rise of unemployment, but unless you see a dramatic drop in the prices of homes, or at least a rise in inventory, you're going to find that the rents are still going to be quite expensive. And if the rents are expensive, then they'll just simply rent the house out as opposed to letting it go into foreclosure if they can't sell it. Right? I mean, this is some of the things that we have learned from the great financial crisis that we try to overlap in today's economy, but it's not the same. It's not the same situation that was taking place. Like, even take, for example, the idea of mortgages. See, right now, you have mortgage rates that are falling. Over the last, like, if I remember right, it was like the best mortgage rates or the lowest mortgage rates in like 2 months. Let's think about this for just a second. All right. At the end of 2023, there was a lot of talk coming from the Federal Reserve about lowering interest rates. And this started actually lowering the mortgage rates within the economy itself. Before the Federal Reserve acted, before they moved their interest rates at all. The moment that they moved the interest rates, mortgage rates started to shoot up. Quite opposite of what it is that the Federal Reserve was doing. Like, they lowered interest rates, lowered the Fed funds rate, and mortgage rates went up. Opposite, right? Opposite of what the Federal Reserve was doing. But we have to think about it from the communication side of things, because the communication of the Federal Reserve has a profound impact on the mortgage market, or on the economy and the general markets or the markets in general. So let's think about the communication that they were delivering back at the end of 2023. 7 rate cuts, major, all kinds of them, taking it back down to 0 again. This is what a lot of people have believed. The dot plot was predicting 7 rate cuts or something. So now what do we have? What is the information that's being delivered by the Federal Reserve now? Oh, well, we're not cutting yet, but towards the end of 2025, right? Somewhere in the second half of 2025, come June or something like that, the Federal Reserve is going to start cutting rates. So then now you think about the message that was being delivered at the end of 2023, and think about the message that is being delivered today. Is it the same message, like all these major interest rate cuts, like at the end of 2023? No. But it is the promise of interest rates coming at some point in the future. Very much like the information that was being delivered at the end of 2023. And so at the end of 2023, when that message was delivered and it actually created a situation within the economy that mortgage rates came down, think about the message that is being delivered now. And what's happening with mortgage rates? They're actually starting to come down, even though the Federal Reserve hadn't moved. But the promise, the expectation of future rate cuts is actually creating an environment in which that starts to happen. Okay? A lot of times people will look at this and say, oh no, man, you got it wrong. It's political. It's all this other stuff that's going on out there. That's fine. Like, I mean, you can take all that stuff into consideration and give it that meaning, but this is evident to me that how it's taking place and how it goes down. This is what the Federal Reserve was going to use for their monetary policy, was their words, their forward guidance. And now you see it taking place. You see it actually working here. So many people out there have wishes and hopes and dreams and beliefs that there's going to be some sort of chaotic event that will then give them the opportunity to get into a house. Like, I see people actually wishing for this to take place. And so I think about like how it is that people are going to be in a position when that actually occurs. Most likely, they're not going to be able to get financing. See, this is where I think a lot of people get lost. If there was a rise in foreclosures because people can't make their payments, most likely it's because there's an issue taking place within the economy where financing is very difficult. Those financial markets are freezing up, making mortgage processing very difficult. So unless you happen to have the cash on hand, you're probably not going to just slip into a house like a lot of people seem to think that they can. And when that situation does arise where these homes are really cheap and there's not a lot of financial offerings, right, or offerings for financial tools to get into that house, then you're going to find that the rich elite who have the cash are going to buy up all those properties, because that's what they do during recessionary, depressionary events. I look at this as a situation that is not going to be corrected or fixed. It's a situation that you have to understand why it's taken place, why we have such separation between the rich and the poor, why property ownership and capitalists are the ones who are on the other side of the wedge. Once you recognize why it's taken place and how it is that you can position yourself to get on the other side of the wedge, all this starts making a lot more sense. You don't get into wishful, hopeful thinking. You get into logic and reason. And you start looking at it in a way that says, hey, what can I do in order to acquire this property? What is it that I need to do to team up with other people so that I can be on the side of the property ownership as opposed to the property renter? These are the things that we have to think about and push for going into the future, because there's nothing the administration can do to make it better for you. Like, I mean, I'm looking at all the chaos that is being whipped around with the promises of firing people, with the promises of being able to deliver stimulus checks, with the promises of making the condition better for housing and all this other stuff. And it's a bunch of empty promises. I wouldn't trust any of those promises for nothing. Right? It's better to look at this situation and say, okay, I understand that you have some promises out there that may deliver an opportunity that'll come in the future, and if it does happen, cool. All right, but until then, I'm not counting it. I'm not counting on that. I'm going to count on my understanding of what's taking place so that I can position myself for it. And if what's taking place right now is a massive separation between the rich and the poor through property ownership and capitalists, well, then that's the position that I'm going to take, or I'm going to do my best to take it. And I'm not going to get mad that other people are doing it and that it's not fair, right? Like, I mean, yeah, you're right. It's not fair. It's not fair that everybody doesn't do it, right? And so if we do it, then it's not fair for them, but it is fair for us, because nothing is fair, right? All right, moving on. 12 minutes, 48 seconds into this. We got all night or GLO. Auto reg is not required. There's case law that covers that. Few know how to implement that case law, though. Must go along to get along. Yeah. Let's see here. I'm the real Wayne Smith, so yeah. Too bad greed loses in the end. Medium home, 1 million Federal Reserve debt notes. But that's, to me, like, is okay. So greed loses in the end to who? To the loser. I mean, only losers hate winners. So if you can't get into a house, you might think about it as being like a losing event for those who can't get in. You're right, man. It's not fair. And I don't mean to call people who can't get into a house a loser, but that's the way people feel about it. It was just like, oh, you're greedy. You're greedy because you got a house and it's going to go up to $1 million, and you know, now everybody else is suffering with the fact that you know they can't get into a house or something like that. And it drives me nuts to hear that. It drives me absolutely bananas, thinking that there's people out there who just simply don't think that they can get into a house. And I'm thinking to myself, man, I have no education, like I have no degree, I have no business, I have no family inheritance, I have none of the stuff. None of that stuff. And I live in one of the most expensive places in the entire nation when it comes to real estate for the size town that I'm in. Right? Astoria has about 10,000 people. If you look it up, municipalities of 10 to 50,000 people, Astoria ranks number 10 as the most expensive in the entire nation. And yet here I am doing exactly what it is that people say you can't do. But I'm doing it. And it's not easy. It's hard. It takes a lot of work. It takes effort. It takes time. Right? It takes sacrifice. And all the times that people are like, oh man, you're just lucky. You know, it's just like, it's not luck. It's not luck at all. If it was luck, then I wouldn't be doing any of this stuff. I would just sit around hoping that I'd be lucky the next day, right? That's not how this works. How it works is dedication, commitment. It takes time, it takes effort, it takes networking. Nothing happens by magic. And then once you are there, you have to maintain that and keep it. Like Simon, I try to avoid any interactions with cops. They're the worst. I don't. I try to interact with the police officers. I make it a point to go, like when a police officer comes into the store, I try to make it a point to go and help them. Whenever I have an opportunity to go speak with police officers, I take that opportunity. I don't avoid cops. I don't avoid them at all. Now, I also don't conduct myself in a way that would have me any kind of trouble with the cops, so therefore I don't really care about talking to them or not, because I don't have any issues, right? So no problems. All right. If you could count on luck, it would be luck. All right. Opportunity, meeting, preparation could be defined as luck. I don't know. I mean, what is luck? Being in the right place at the right time because you knew that if you position yourself in that sort of area that the opportunity would then present itself. Is that lucky? How many people out there who have tried and failed and tried and failed and tried and failed until they eventually got to the point that all the failure taught them the lessons to say, hey, you need to conduct yourself in this particular way. And when people see it, they go like, damn, you're lucky. It was just like, why? It was just like, because you just effortlessly do this stuff through life. And it was like, yeah, you know how much punishment and pain I had to experience in order to be able to do that? It was just like, that ain't luck. Right? That's experience. It's time. It's pain. It's suffering. It's, sacrifice. Of course, it's part luck. Can't imagine how you would get YouTube income if this was the 1800s. Jesus, I think that's a really terrible way of actually looking at things, because if it was the 1800s, we wouldn't be sitting in a situation where I would have to compete against a bunch of other people who were making money online. Right? I would only have to compete against myself in what it is that I could produce, because I would be producing what it is that I needed for my own survival, not producing what it is that somebody else is going to purchase from me so that I could have a survival. Right? Back in the 1800s, literally like 99% of the people were self-employed farmers. Right? They were growing their own food. That was, and trading it, because that was survival. We're not living in those same situations, and to try and compare it back to that is very unrealistic. You take your opportunities for what you have today. Back then, there would have been opportunities that I would have had to look for and take advantage of back then. So it wouldn't have made a difference if it was 1800s, 1900s, or 2000s. It doesn't make any difference. It's all up in here. What it is that you plan on doing. Are you going to screw around and drink whiskey all day and, play cards or something back in the 1800s? Or were you going to be figuring out what it is that you can do to make that next sale, make that next invention, make that next product, make that next distribution thing happen, right? This is the ideas that go through your head when you're trying to figure out what it is that you need to do in order to make the best of your options and your time, right? I mean, regardless, it doesn't matter. YouTube is it's just another part of it, right? If it wasn't YouTube, I'd be doing something else. But YouTube happened to be it. All right, cool. I'm using YouTube, All right, YouTube was around in 1890, but the revenue came in the 1900s. Okay. Chasing excellence is timeless. Absolutely, Justin. That's exactly right. Benny, oh gosh. I always get concerned. Benny, mad respect, but bro, I get concerned with some of your comments. Okay, let's see. All right, Simon, what do you think about removal of income tax, and how will that look after 6-12 months of implementation? I don't know. If you want to figure out another way to bring in some new money into the system, that's fine, but it's not going to make it any better for anybody out there when it comes to whether or not you're taxed or not. It might in the initial, I shouldn't say it wouldn't make it any better. The initial, hey, you don't have to pay these taxes. You get this extra income coming in. With that extra income, now your debts and stuff like that, your burden of your monthly payments are a little bit easier because now you have this extra income. Okay, that part of it I totally agree with. Most people are not going to take it into consideration as like, man, I shouldn't increase my standard of living, right? I should keep my standard of living very low, pay off debts, reinvest this back into production and savings, and that way I don't separate, be in a position in which that this added money doesn't separate the rich from the poor. However, most people won't think that. What they will think is, cool, new Denali payment, right? So now they'll go out there and buy a luxurious item, forcing themselves to have to make that higher payment, which is then going to put them on the bottom side of the wedge, and it will make it ever increasingly more inequality because of it. Anytime you have new money coming into the system, I do not care which direction it comes from, if you have new money coming into the system, it will create a situation where the inequality will grow. I don't care if you give it to the poor first or if you give it to the rich first, it will all funnel back up to the rich and the separation will happen. Now, the only way that you can give money to the poor and not have that situation take place is if the poor were to consciously not buy into a good experience, a pleasurable experience, a luxurious experience. If they do not do that, then they could take that money, pay off debt, put it into production and savings, and maybe that money would not separate them from the rich. But that's not what they will do. Now, if you did happen to be in a situation in which that you took the national debt and you were able to actually cause that to go down, meaning not increasing the national debt, that means solving the deficit problem and then solving the debt problem by making the debt burden less, like shrinking the debt. If you were to shrink the debt at the same time as handing money over to the people, I don't know how you would do this, tax cuts, whatever it is that you're happening at the time, if you were able to figure out a way to shrink the debt, which is, again, like an impossibility, I couldn't figure out how you would do this, and you injected that money into the people's hands, whether it was a tax cut or whatever, then it may not create the situation with the inequality. But you have to lower the debt at the same time because the debt issuance is the new money. I don't care where it comes from. But if you have new money coming in and it's coming from debt issuance, I don't care what you do on the other side of it. You can cut taxes, you can fire people, you can do all that stuff. It doesn't make any difference. The debt issuance increasing is where the new money is coming in, and that's where the separation between the rich and the poor occur. So no matter what you do on the other side of that, if you have debt issuance that is still increasing, then you're going to have separation between the rich and the poor. So give them a tax break, right? It'll relieve the burden for a while, make them, ease the pain for a minute. But at the end of pretty much at the end of the day, those people will have increased their standard of living by going out and buying a fancy new car, or they'll dump it into luxurious experience or whatever. But very few people will pay off debt, and very few people will reinvest that back into production and savings and put themselves on the other side of the wedge. Most people will not do that. Right? So, hey, it'll be great for a moment while it happens. Shortly after it happens, everybody will be like, woohoo, this is awesome. But it'll be very temporary. All right. Thoughts on Bank of England defaulting on gold deliveries? Not a surprise. I mean, not a surprise at all from that. All right. Removing tax removes government's ability to launder money. The political class are forced to actually be productive. It won't happen. They're not productive. Like the government is not productive at anything, right? All they can do is take from you, us, the people. Right? We have to be industrious, and then men come in and take our time and effort away from us and then use it for whatever it is that they want. But it's like us. We have to be productive first. They can't make us productive. Right? They can only take our production from us. They can only take our time and effort from us. This is where I find it very amusing when people say, oh no, the government's in control of the economy. They're the ones who are creating the economy, making it powerful. No, absolutely not. Absolutely not. We, the people, are the industrious ones. They're the government who comes in and takes our effort away from us. Right? If it wasn't for them, we would be massively more industrious. Right? But then, of course, we would have fallen into poverty and misery when we relinquished all the gold back out there to the rest of the world because of our high standard of living. But that's the Cantillon effect. That's the way it works. All they do is take, and all they give is grief. Why are we trying to pay down I don't think we are trying to pay down the national debt. And who said it was to be paid back? Government created money doesn't need to be paid back. Well, no, it does, because you got to understand that the money was borrowed by selling U.S. Treasury bonds. So think about the people who own U.S. Treasury bonds. When you say it doesn't need to be paid back, the people who own Treasury bonds are not going to get paid back. That's what you just said. It was just like, so if I have a retirement fund that is full of these treasury bonds, you're just basically saying that I'm not going to get paid. If I have an insurance company that is sitting with a balance sheet of assets that are loaded up with these treasury bonds, you're basically saying that the company is now insolvent because all those assets are no longer worth anything. Every single country out there that is backing their money with the US dollar and holding on to US treasury notes or treasury bonds as the main asset for that is also going to face a burden of going into a defaulting position, as their assets would no longer be able to cover their liabilities because we're not paying back that debt. You can't do that. Like, you just simply can't do it. You know, if you did, then all the retired people will be on the streets crying in poverty and misery because the government's not going to pay back their debt. Right? You got to think, every single bond that is being issued and being purchased out there, whether it's the Federal Reserve who's buying it, or a private insurance company, or an individual retirement account, or, you know, anybody. Like, you could go out there and buy a bond. Basically, what you are saying is that if you buy that bond, the government's not going to pay you back. Well, why would you want to buy the bond if the government's not going to pay you back? You wouldn't. Right? The government absolutely has to pay it back. Now, whether or not they pay it back with a dollar that has any kind of purchasing power behind it, that's another story. Right? But they will definitely pay it. Zero chance of default. What time is it? 1, 2, 2, 2. Okay. I got a few more minutes here, guys, and then I'm going to call it quits. A housing boom and bust are over after one massive correction. I don't understand where does the correction come in? This is the thing. Like, the correction comes from buyers coming back. The buyers are disappearing, and so the sellers are like, well, if you're going to disappear, so are we. And you can rent this place from us, all right? If you're not going to buy it, then rent it. Hey, right on. Thank you very much. Tomer Klein, thank you very much for the $26, man. That is a great super chat. You're very, very generous of you, man. All right, I've been following you since 1,000 and under subs and Zuber. One thing that doesn't change is hard work and ingenuity wins every time. Keep it up. Well, thank you so much, man. I really appreciate the long-time viewership. I really appreciate that support with that super chat. That is very, very generous of you. If they pay back debt with devalued dollars, you get inflation. Well, yeah, I mean, absolutely. Like, inflation is baked into the cake. There is zero doubt that there's going to be inflationary pressures coming. See, this is the problem that I think a lot of times people will look at. They'll like, inflation is when prices move up. That's absolutely incorrect. That is not the way that you should look at inflation. Inflation is the expansion of money and credit. The prices is the results. It's the symptom of inflation. Now, just because you have printed up a bunch of money, or you have a bunch of money that has now been injected into the system, doesn't necessarily mean it's going to cause the prices to move up. People take this into consideration. It says, no, absolutely it'll cause prices to go up. That's nothing could be further from the truth. Do not internalize it in this fashion. If you internalize the idea that money printer go off or increase in money is going to automatically cause the prices to go up, you will fail to understand the great financial crisis and how it is that the quantitative easing of 1, 2, 3, and 4 that took the Fed's balance sheet from $850 billion to over $4.5 trillion failed to produce an inflationary scenario. Again, the Federal Reserve's expansion of the balance sheet of $850 billion to over $4.5 trillion failed to produce the inflationary scenario that the Fed was looking for. Why? It's because that money has to be spent at all channels at the same time. And the reason why it has to enter all channels at the same time and be spent at the same time through all these channels is because what it's going to do is it's going to increase demand, aggregate demand across the board. When you increase demand, you'll have supply-demand imbalances, and then you'll find prices moving up from there. But if that money sits in the big banks and never makes it out there through debt issuance, right, borrowing money to buy houses and cars and doing all that other stuff, unless there is a significant amount of that taking place from all channels, basically borrowing money to buy toothpaste, then there's not going to be that extra money going into purchasing toothpaste. You're not going to increase the demand for toothpaste just because you increased all the money. You see where I'm getting at on this? This is very important to understand. Once you internalize it in this fashion, then you can now understand and look at inflation in a much different fashion, because inflation comes from an increase in aggregate demand. You increase the demand, you will cause supply-demand imbalances, and you'll have prices moving up. You can create an inflationary scenario within the prices, like price inflation, just by simply having money velocity picking up. You don't have to add anything to it. You can just have the money velocity pick up. And that would create a price inflationary scenario, even though the new money isn't there. But new money being injected in and then being spent at all channels will create supply-demand imbalances, and prices will move up. All right, you can say average without showing the below average at some point. You can't say average without showing the below average at some point. Huh. The government increasing money supply, but they pay off the books with equal amounts. If the population remains fixed, where will new demand for housing come from? Well, first of all, if the population was to stay fixed, then we would have a situation that has never ever existed in the history of time. So that's not a possibility, right? That's like, it's a hypothetical that would never exist. All-nighter hider, cash heavy. I'm going to sweeten the pot with 50% down. All right. Drugs count as a luxurious, not chasing excellence, except maybe meth. All right. Smoke that thumbs up like Cheech and Chong. Thank you guys for being here. We got 380 people watching with 78 likes. Thank you so much for hitting that like button. I only have another like 5 minutes before I have to go clock back in, but this has been a really good talk. I think understanding the situation that we are now in is very different from any situation that we have ever faced in the past, and it's really due to the fact that we have had a continuous amount of new money poured into the system that has created the massive inequality that we now experience. So people think in their mind, man, it should be a different way. We should be able to have a situation in which that our average daily job should be enough to buy a house and have the, you know, the wife and the kids and the vacations and all that other stuff, but we've moved on beyond that. The economy, from a working class position, being able to have all those like American dream experiences, is from a time long ago when we were producers savers. We are now debtors consumers, and so we have to take in a different mindset that says I can't have just a regular good manufacturing job and expect it to be enough. That's not going to work anymore. I'm going to need that job to maintain my life, but then I'm going to have to figure out other ways in order to acquire the things that I believe that we would need as individuals to get ourselves on that other side of the wedge. Not everybody's going to do that. Right? Some people are going to complain about it, and other people are going to recognize that complaining isn't going to help and that they actually have to take action. What's more cost effective, a stick-built garage or one of those metal garage kits? Boy, I think that would have to come down to the design of it and who it is that you're having putting it together. Just to let you know, right now, steel and metal prices are going to be moving up next month. I mean, at least we got the notification for that. I haven't seen where lumber prices have really dramatically moved. Cedar prices are definitely moving up, Western red cedar, but the framing Doug fir, like framing lumber, Doug fir, stuff like that, it still seems to be very reasonably priced. in low. So at this point, I'm thinking that, if you could probably stock the wood framing right now is still fairly inexpensive. How long that lasts, I don't know. I mean, it would really take a increase in builder sentiment, which would come from an increase in buyer traffic, which we can all recognize right now is not happening. All right. Free above college level education. All right. The next 30 years are going to be fire. New tech industry revolution is on the horizon. The fertility rate is very low and going lower. 2.1 is the replacement rate. All right. Don't consume, make debt work for you. Absolutely. That's probably one of the better pieces of advice, is to use debt to make it work for you, because all these other people out there who are really moving themselves up on the, like, I don't even know how to put it, like, who are pushing themselves so far away from the poor, like, climbing that property ladder, but not even that. It's like, it's even bigger than that. These are the people who borrow money to buy cash flowing assets. You think about being on the other side of the wedge with that. And then you have everybody else who is borrowing money to then buy a luxurious item, whether it's an experience or a car or something of that nature. And so now they have to work that much harder to pay that thing off, meaning all the money, all the effort, all the time that they are putting into it doesn't come back as a reward. It comes back as this burden that you have to deal with. Where this other person puts no time, no effort into having a debt that is being paid for by somebody else. And then they get the asset at the end. Think about how that creates that wedge. And this is the way that is now, like, so prevalent within the economy, that if you are not on that path to borrow money to buy cash flowing assets, there's almost no way you're going to be able to keep up. Right? Like, your day job and side hustles and everything else has to compete against that. It's difficult. All right. Uneducated Economist, you guys let me know.